You know that feeling, right? It's 2 a.m., the house is quiet, but your brain is screaming. You're lying there staring at the ceiling, and that cold knot in your stomach just won't loosen up. It's that physical, heavy pressure in your chest. You just saw a news notification, something about a strike in the Middle East, or oil prices hitting $100, or the S&P 500 plummeting in pre-market trading. Look, for most people, that's not just market news. It's a threat to their survival. You start doing the math in your head. If the market drops 20%, my 401k is hit. If gas goes up, my commute costs more. If inflation spikes again, I'm basically working for free by Friday. That's financial anxiety. It's not a numbers problem, it's a physical reaction. Your heart rate is up, your palms are sweaty, and you feel like you need to do something, anything, just to make the red numbers stop. My name is Adam, and I'm obsessed with the survival mode brain chemistry that keeps us broke and why reaching a single financial milestone is the only way to turn that midnight anxiety into actual breathing room. Here's the thing. We've been told that investing is about math. It's not. It's about biology. And until you understand why your brain is literally wired to make you lose money during a crisis, you're always going to be the one funding the yachts of the people who don't panic. Let's talk about financial survival mode. When you're living paycheck to paycheck, which, let's be real, is most of the working world, your brain operates out of the amygdala. That's the lizard part of your brain. Its only job is to keep you from getting eaten by a tiger. In 2026, the tiger is a military headline or a stock market crash. When you see your portfolio drop 10% in a week, your lizard brain doesn't see long-term opportunity, it sees loss of resources. It triggers a fight or flight response. This is what I call the survival cell. The ordinary employee sells at the bottom not because they're dumb, but because they have no choice. If you don't have a cash buffer, what the wealthy call margin, a market crash is a direct threat to your ability to pay rent or fix your car next month. You sell because you're terrified the money will vanish entirely. But here's the kicker. The wealthy aren't braver than you. They just have a different brain chemistry because they have a buffer. When the market crashes, they aren't in survival mode. They're in wealth building mode. While the employee is asking, how do I protect what's left? The rich are asking, what's on sale? Look, let's use a real world example. Right now, everyone is talking about the Strait of Hormuz. It's this tiny strip of water, 21 miles wide. 1/3 of the world's oil flows through it. If that closes, oil spikes, gas prices jump, and inflation comes roaring back. The news media loves this. Why? Because fear is the most powerful attention-grabbing tool on the planet. A headline that says markets flat, long-term investors unaffected gets 0 clicks. But world on brink of energy collapse? That keeps you glued to the screen. This creates what I call the panic premium. The fear before the event is almost always more expensive than the event itself. Think about it. After the 9/11 attacks, the worst tragedy on American soil, the market dropped 11% in a week. Within 1 month, it had fully recovered. During the Gulf War in 1990, the market dropped 15% and recovered within months. The person who sold on September 10th because they felt something bad was coming lost. The person who sold on September 12th in a panic lost even more. They converted a temporary price drop into a permanent loss of wealth. In the short term, the market is a voting machine. It's a giant popularity contest driven by emotion, rumors, and panic. But in the long term, it's a weighing machine. It weighs the actual profits, the innovation, and the value of real businesses. Think about it. Does a conflict in Iran actually change how many people will buy an iPhone in 5 years? Does it change whether Visa is going to process billions of transactions? Probably not. The value of the business stays the same, but the price drops because people are voting with their fear. Smart investors, the top 1%, wait for the voting machine to freak out so they can buy quality at a discount. They know that history is a broken record. Over the last 50 years, the S&P 500 has dipped an average of 6.4% in the first 10 days after a war starts. But 12 months later, it's up an average of 9%. If you bought the dip during every war in the last 5 decades, you'd be up over 15% in a year. So how do you move from survival mode to wealth building mode? It's not about timing the market. That's gambling. It's about a system. Step 1. Build the buffer. If you're living paycheck to paycheck, you are a hostage to the news. You need 3 to 6 months of cash in a high-yield savings account. This isn't just savings, it's your anxiety insurance. It's the money that allows you to look at a 20% market crash and say, cool, I don't need to touch my stocks for 5 years, so I don't care. Step 2. Stop sitting in 100% cash. A lot of people think cash is safe during a war. It's not. If you sit in cash for 10 years, you're choosing to lose 45% of your purchasing power to inflation. Cash is a guaranteed slow-motion train wreck. You need to be in the S&P 500, which is chugged along at 10% annually through every war, pandemic, and recession we've ever had. Look, the market is currently overvalued by about 120% according to the Warren Buffett indicator. Does that mean you should wait for a crash? No, because waiting for a pullback cost people way more money than the actual pullbacks ever did. You invest a fixed amount every single week or month. When the market is high, you buy less. When the Hormuz chain causes a panic and the market dips, your fixed amount buys more shares. During a crisis, certain things move in predictable ways. Defense stocks usually go up. Tech usually drops first because it's risk on, and then it rebounds the hardest. Take a company like Palantir, PLTR. It's a unicorn because 50% of its business is government defense. It literally thrives on chaos, while the other 50% is AI and tech growth. Since the Russia-Ukraine invasion, it's up massively because it lives at the intersection of crisis and innovation. That's a weighing machine stock. I want you to leave you with a thought experiment. Imagine you're Tom Hanks in Castaway. You get stuck on an island for 5 years. You have no cell phone, no CNBC, no Twitter, no breaking news about Iran or Israel. Before the plane crashed, you put $10,000 into a diversified portfolio. For 5 years, you did nothing but survive. You didn't sell during the 2026 Iran crisis because you didn't even know it was happening. When you finally get rescued and check your account, what do you think happened? History says your account is likely much, much higher. You won because you were forced to be patient. You won because your survival mode brain was focused on coconuts, not your 401k balance. The wealthy simulate this. They buy quality and then they stay on the island. They know that the exit, however temporary it feels, almost always becomes permanent. Once you're out, it's psychologically impossible to get back in because the market always looks scary when you're standing on the sidelines. Right now, we are in a wealth divergence moment. These happen every few years, 2008, 2020, and now. This is where the gap between the rich and the working class widens, not because of a conspiracy, but because of a difference in reaction. The emotional investor is chasing oil ETFs and defense stocks because they saw it on the news. They're reacting. They're already too late. The professionals have already priced in those trades. The logical investor, the one with the Atom Wealth mindset, is sitting on their hands, or better yet, they're doing their homework. They're looking for great businesses that are being sold for a fear discount. Look, today is a hard day to be an investor. It's scary. But remember, the market doesn't care about your fear. It only rewards your patience. So here's my challenge to you. Next time you feel that knot in your stomach at 2 a.m., don't open your brokerage app. Open your spreadsheet, look at your buffer, and if you don't have a buffer yet, make that your only mission. Stop speculation, start building margin, because the best way to predict the future is to have enough cash that you don't have to care what the future looks like next week. Stay disciplined, build your mindset. See you in the next video.